let I share about our product that I take from CIMB Bank, that is overdraft. Overdraft is called as insufficient fund. They have advantage of that is they has a flexibility to overdraft. They can quick arrange, and they also have normally charge to overdraft in rate. Okay, for their disadvantage is they have agreement fee, they have repayment, they have charge if you exist in their month or due, and they also overdraft may be secured, and they not like the loan because the bank have to maintain your current account in order to get overdraft, and you have to transfer to business bank account. Okay, the interest rate apply in variable. Utilized overdraft facility may be reduced by the bank at a short notice. For the facility inside CIMB Bank that we choose is CIMB Bank current account by the bank. You can use collateral or you already have with CIMB Bank like fixed deposit, selected structure product FRIND, and selected unit trust fund that can use this collateral instead of the Amanah Saham Bumiputra unit from Amanah Saham Nasional Berhad. And CIMB Bank for the overdraft, they has 4 products, that is stamp duty, document fee, commitment fee, and exchange interest. They have charge in the like stamp duty. They have as per stamp Act 1949 reversed to 1989, and M100 payable to Amanah Saham Nasional Berhad SNB for documentation fee, and 1% per annum on the unused amount of the facility is payable if total overdraft facility which the bank is more 2,100,000 commitment fee. BR plus 6.35% or minimum of 5 ringgit will be charged on any amount in excess of your facility limit. That for excess interest. That's all for all my overdraft that can I share to you. Thank you.
Moving on, we are going to talk about letter of credit. Letter of credit is a letter from a bank guaranteeing that a buyer's payment to a seller will be received on time and for the correct amount. There are several types of LC. The first one is standby LC, where this LC functions as letter of warranty to effect payment in the event of non-payment or default by the buyers. The second one is revolving LC, where it used to handle shipment of goods on a continuous basis. Net is a transferable LC, where it can be transferred in a part or in its entire for the first beneficiary. Okay, the fourth one is back-to-back LC. It is used when a beneficiary to a LC required to open another LC for the purchase good required in the first credit. The next one is the party to an LC, such as the applicant, where applicant known as the buyers who request the banks to issue the LC. The second one is issuing bank, where it is bank that issue the LC upon the request from the applicant. The third one is advising bank, where the bank advise LC to the beneficiary. The fourth one is the beneficiary itself, where we know this as the seller or exporter of the good. Okay. Last but not least, the facilities of LC in CIMB Bank, such as issuance and amendment involving increase in amount and extension of expiry date, whereas the fee and charge for it 0.1 per month or part thereof, and the minimum of 100 ringgit. For the acceptance is 0.1% or part thereof, and also minimum for 100 ringgit. Next is document discrepancy fee, which is ringgit Malaysian denominated documentary credit of around 50 ringgit flat, and also for FCY denominated documentary credit for USD 50 flat or equivalents. You can find out more through CIMB website for more information. Thank you.
What is trust receipt? A trust receipt is a financial document intended to buy a bank and a businesses that has received delivery of goods but cannot pay for the purchase until after the inventory is sold. Okay, and the advantages of trust receipt is buyer can enjoy the benefit, which is do not need to effect payment immediately when documents are presented under documentary credits, documentary collection or open account. Number 2 is financing can be up to 100% of the documentary credit, documentary collection or invoice value. Enjoy credit. Next is enjoy credit terms pre-approved by the bank with principal and interest only payable on maturity. Number 4 is buyer's working capital or cash flow is not tied up and can be deployed for other businesses purpose. Okay, number 5 is easy source of finance, which is usually banks do not hesitate to give trust credit. This is because it is certain that the money would be repaid with interest once the goods are sold. It is a win-win situation to both the bank and the borrower, since the bank gets money in the form of interest and the company earns money without having to initially invest. Number 6 is instant liquidity. The cash otherwise available can be used for other working capital and investment purpose. Okay, this enables the company for effective treasury management. Next, the disadvantages of trust receipt is excessive control, which is banks lay a lot of condition on the customer. Okay, few conditions are to maintain the inventory pertaining to trust credit separately. Number 2 is maintain and issue reports to the bank on a periodic basis. Number 3 is the clause that bank may conduct a stock audit if required. Number 4, cost constraint. The company may incur additional costs in terms of interest and to comply with the bank's other conditions. Next, it is also if there occur the excessive documentation. Okay, we do not get a trusted credit unless the minimum above documentation is submitted. Okay. Practically, it is not possible to get customers clearance for export of goods to the customer without actually manufacturing to the goods. Okay, one of the facilities in CIMB that the customer will get is better cash flow with short-term trade financing for their purchases or importing goods. One of the products that offer a letter of offer.
My name is Erika Wee, metric number 264837. I will discuss a little about bank acceptance in CIMB Bank. First of all, the definition for bank acceptance, which is also known as BA, is it is a short-term credit investment credited by a non-financial firm and guaranteed by a bank to make a payment. BAs are basically commercial paper with the added guarantee of a bank. It is a time draft drawn on a bank by an exporter or an importer to help pay for merchandise or to purchase foreign currencies. Its purpose is to shift default risk for the lender in a credit transaction from the borrower to the more creditworthy bank. There are 3 features and benefits in bank acceptance offered by CIMB Bank, which is cost-effective, where bank acceptance are negotiable in a secondary market. It makes them more cost-effective way to finance purchases or sales. Next, alternative financing. The bank acceptance are an alternative way to finance purchase or importation or exportation. Lastly, it requires less paperwork when trade using bank acceptance. Accepted commissions is the only types of product offered, and the fee and charges is as per letter of offer. The advantages of BA is that they do not need to be held until maturities. BAs are traded at discount from face value in secondary market. They can be sold off in secondary markets, where investors and institutions constantly trade BAs. Second advantage is the lower cost. Smaller companies will gain access to lower rates in the money market. The interest rate is usually low, and it's well worth the opportunities for smaller companies receive in return. The cost will hardly influence to their profits, but they will receive a new partner. Last advantage is there is no advance payment for bank acceptance. When the buyer has a good relationship with the bank, the buyer does not have to worry about making advance payments. And as both buyer and seller do business, build trust, and over time, they do not need any BA. Thus, we can say that BA helps to build trust between the parties. However, there are always negative side of BA, which is one of it is suitability. Banks tend to be very picky when it's come to offer like this. They are reluctant to make any agreements of this type when they see a business with a very low income margin. Secondly, BA are in need of collateral. Many banks prefer to reinforce their own security with the help of collateral. The bank will want movable assets as the paid fee may not be enough, so it can be a huge blow on a fragile company. Last but not least, banks will analyze the financial thoroughly. No banks will offer up the credit without digging deep into company's past. The investigation may take time, and the research may reveal issues with a company's credit that could sour the deal. That's all from me. Thank you.
Selamat sejahtera. My name is Narin anak Puan Sharon. My metric number is 264170. Now I will continue to present about a bank guarantee. Okay, what is a bank guarantee? Okay, a bank guarantee is an assurance that a bank provides to a contract between two external, which is the buyer and the seller, in the relations to the guarantee, an applicant and or a beneficiary. The bank guarantee serves as a risk management tool for the beneficiary, as the bank assumes liability for completion of the contract should the buyer default on their debts or obligations. Okay, next, what is the advantages of bank guarantee? Okay, first, reductions of financial risk. The needs of bank guarantee arose because of the increased default by the buyer. Seller were not willing to supply goods to unknown buyer without having payment received. A sense of mistrust was present. Bank guarantees solve this issue by acting as an assurance to the seller. The second advantages of bank guarantee is increased opportunities. By having a bank guarantee with itself, a business can grasp opportunities in the market which were earlier not available to it. A public perception would be developed that a bank stands with a particular businesses. Having a bank as a partner is always a sign of inherent strength and faith towards the businesses. The last advantages of bank guarantee is small fee. The fee charged by the bank are also very nominal. It ranges from about 0.5 until 1% of the amount guaranteed of the bank. Due to its nominal nature, the fees do not have a significant impact on the profits of the businesses. Okay, next, what about disadvantages of bank guarantee? Okay, first disadvantages is strict assessment by banks. When the second disadvantages of bank guarantee is financial considerations. Another demerit of bank guarantee is that it is not suitable for loss-making businesses. The banks even refrain from the entities which have low cash reserve, weak credit policies, and others. Moreover, businesses which operate on a low margin of profits are hesitant of taking banks guarantees as their margins are not significant enough to absorb fees. The last disadvantages of bank guarantee is collateral. Just a certain fee extending bank guarantee is sometimes not enough. Collaterals may be demanded by the banks in the form of movable assets of the company. The banks would also like to cover themselves in case they had to make the payments to the beneficiary. Blanking collateral